welcome to the Real Money Rundown, where we're going to break down the latest in the gold and silver markets for you as quickly as we can. I'm Jeremy Wiseman. Alongside me, co-host Jerry Correa. Jerry, let's get into it. So this has been a massive couple weeks in the market. We're seeing a drain on the LBMA in a massive, massive scale. We're seeing delays now. We've seen over $4.5 billion worth of gold already delivered to the US, onshored to the US, and obviously that's all standing for delivery. They're ready to deliver that product. So we wanted to frame this in terms of, is this a natural consequence of the incoming Basel III rules coming set to be imposed this summer, which would tighten the rules on the gold market, or I should say, is this the US orchestrating what we could call a controlled reset? Is it possible that they're bringing back gold into the financial system to reshape the future of money? So let's start with what is actually happening right now, Jerry, and then we'll get in, tell us a little bit more about what's happening, and then we'll get into what the Basel III rules are and how that could be impacting what we're seeing right now.
Yeah, this is mind-blowing stuff, Jeremy. This is not just stuff that we're following now. This is totally mainstream. It's catching mainstream. TD Bank, TD commodity strategist Daniel Galley talked about this on BNN News in Toronto. But what we're seeing is a massive gold repatriation. Call it what it is. Metals are being moved from LBMA London over to the CME. That is responsible for a lot of the unallocated contracts. And over concerns about potential tariffs. We've seen a surge in inventory stockpiles increasing in the COMEX of physical gold, increasing like 75%. And we're talking about over 900 tons of gold moving into New York. Oh, and it's the highest we've seen in a few years. This is rendering London to be short now. They call it a stock out. Gold supplies in London has decreased to critical levels, impacting liquidity, rising borrowing costs because the physical gold obviously guarantees all of the contracts that they're selling. So the borrowing costs on this have surged, and on the reduced availability on the metals. But this is huge. This has potentially failed to deliver on the Bank of England, because the wait times now is about 4 to 8 weeks for the Bank of England, the central bank, to deliver on the gold. So everyone's scrambling. Central banks are coming to the rescue. But this is already has revealed that the Bank of England, if you cannot deliver within 5 days, this is FTD, this has failed to deliver. So financial strains are abounding, but we're watching the trends. As you said, Basel III rules.
Yeah, can you tell us what the Basel III rules are? Because let's just, for a minute, let's say that this is all about Basel III, right? We do think it is probably more than that, but let's just say it's only about Basel III. Can you tell us what the banking regulations are about and why this could be the actual reason why it's happening?
Yeah, then the narrative suggesting that tariffs is driving this repatriation. I mean, it does fit into, to the blame game and blaming the tariffs, which is very easy to do. But a bigger picture we've been following for years has been the change of Bank of International Settlements Basel III requirements to safeguard the banking system globally. Now they're disvaluing unallocated gold positions. If you had something in your balance sheet that was once paper that was used to guarantee a loan, and they're now saying, hey, this piece of paper it's no longer any leverage to you. It's no longer collateral. You need to actually shore up and get some physical allocated gold. So
in other words, and the rules come into effect, what, June?
Yeah. So despite what some media suggest that it's tariff related, instead it should be attributed to the Basel III regulations set to take place in the US on July 1st of this year, 2025. These rules have already been implemented in Canada, but they really don't impact the precious metal space because, as we know, the U.S. is pretty much the king of these gold and silver derivatives. It's
So again,
it's
it's about the fact that with Basel III rules, it means that gold is a tier one asset. Having a paper version of it no longer counts on your books. So the idea here is, well, hey, maybe the reason for all of this isn't necessarily tariffs, but it could be that these banks are preparing for these
yeah,
rules to be implemented.
they have to. They have to.
Okay.
If we follow the very foundation of the U.S. banking system, and we followed shuttering over the last banks shuttering down over the last 2 3 years. How many banks have shut down? How many banks, due to unrealized losses, have shut down? By law, the U.S. primarily hold U.S. bonds as their blue chip collateral. The bond the bond values have dropped. The collateral values, the things that back the US bond market, have dropped in value. The things that back the bonds, the collateral, is mortgage backed security.
And don't forget the
It's
bricks.
junk.
And don't forget the bricks are have been de-dollarizing. They've been stacking gold. The trust in entities is at all-time low in these institutions. So how are you going to bring back the trust? How are you going to create trade with these partners again?
Exactly. What are you going to do? What can we pull in to the US, the banking system, into the US Treasury? How can we fix the bond? So, as we watch the trends of de dollarization and we watch the trends of Basel III rules implementation, they're all moving pistons, and all roads are leading to gold, and their gold is leading the way.
Okay,
And
let's add
even
this.
silver is leading the way as well.
Okay, so let's add this into the mix. We put this up on our X account last week. Breaking, the U.S. Mint takes another massive delivery of physical metals. Okay, they took 2.2 million from Asahi, 60 million gold from FC Stone, International FC Stone, 16 million from StoneX, and 17 million, sorry, 2.2 million silver from Asahi, 60 million from of gold from International FC Stone, 16 million silver from StoneX, and 17 million from A-Mark Precious Metals. That is a whole lot of refinery product going into the U.S. Mint.
Yeah. And we've been helping a lot. I mean, people are
We?
famished financially. People are selling.
Okay. So yeah, but the government isn't forcing people to sell.
No, no,
You know,
not really
this isn't
forcing.
your Lyndon Johnson run on pulling precious metals out of the market. It just happens to be that, these wholesalers and refiners happen to have a lot of product, and it seems like the Treasury is happy to accommodate purchasing
Yep.
that product.
Yeah, they
So
they they
are
definitely need it.
we setting up for a gold revaluation?
It looks that way, Jeremy. And when you're talking about having the reason that you have all this debt, you have $36.5 trillion now in US debt with a falling bond in the US. We need to fix that bond. The US has to address, and I think they're making the moves to address, from the potential removal of income tax and the gold standard restoration act that has been tabled already. These are things that are moving, and we have a huge movement towards stabilizing and fixing the bond market with a 50-year gold redeemable back bond in the US, which is massive. And when you have something now to collateralize and back up your bond, I think you have the solution there. So the solution, once again, as it always done in resets, financially, globally, anytime there is a problem in the world's market, and these problems always repeat. History in terms of money and currency, they tend to not just rhyme, they repeat. So whatever happened in the past, we've seen revaluation happen before, and there are accounts for revaluation with the bank of the central bank of Holland. They do have a gold revaluation account. Central banks are set, and this is the trend. Going back to the gold and even silver reserves with the Bank of Russia, they're adding silver as a reserve. The clear
It
theme is reserves.
Well, it's amazing when you think about what's happening right now, and we've been tracking the central banks accumulating gold for several years now. And all of a sudden, you have just an onslaught of product being taken out of the LBMA to the United States. And it's almost like they are loading up fast at the last minute. And again, we posted on our X from Eric Jung about he's talking about this debacle and it's exposing the good delivery system. This kind
Mhm.
of, well, you trade the paper in the US and the comics, but the actual physicals over in London. And this is just breaking that whole thing apart, saying, no, 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 we're going to bring all of it over here. And then he floated the idea as well, something we've been talking about, you just mentioned, with Judy Shelton talking about having a gold-backed bond. I think she said it's a 50-year gold-backed bond that they want to potentially, she would love to see launched in 2026. And Eric talked about, well, you get all the gold on shore, you revalue it before you launch the bond, and you're ready to go. And look at
Mhm.
where the prices of the metals are. I mean, right now, you know, couple days ago, are we going to break 2,800? I think we started the year below 2,700
Yeah.
US, and here we are. We're already knocking on the door of 2,900. The ratio between gold and silver is as wide as ever, and yet it's slowly, the gold price is slowly pulling silver higher.
Mhm.
So could we be looking at a crazy year in the markets where gold and silver are just ratcheting higher constantly? I mean,
Yeah.
definitely there's pressure. Clearly, there's pressure in the market right now. It's too bad you're seeing selling on the retail, but the demand on the um, let's say sovereign side
Yeah.
is massive. And I guess my other question is so one, are we going to see, do you think that Eric's right? We're looking at a revaluation this year. And two, could gold be part of the new sovereign wealth fund that Trump has put forward?
I think he nails he nails he nails it right on the spot. We're seeing the total convergence of all of these things, from a shift from paper-based manipulation to true price discovery. It's going to unlock significant upside. We're seeing a shift from just gold and silver being this insurance policy, this hedge, to a growth catalyst. Gold it's evolved. The status quo has changed from safe haven. Yeah, it will always be your safe haven. Don't get me wrong. I'm not forfeiting that. That still remains, but it's into a high growth asset because you have institutional and sovereign together now accumulating at the same time. We're talking about participation with a finite good of product, finite amount of products. So as we have that, there's a huge revaluation potential that to take care of the debts, because you need something on your balance sheet now, or to wipe out the debt, to pay off the debts, or to have an asset that measures up to the debt, because that's a healthy balance sheet as well. I can have 36 trillion, but guess what? I have potentially 34 trillion in assets.
Yeah.
So life goes on. I think we see a solution. We see the solution, and all roads lead once again to gold and silver. You have an industrial monetary convergence. There is a huge talk about critical minerals, critical metals, seizing of critical minerals globally now. We have them here in Canada. The mining institutions here in Canada have been, begging the government, please include silver as critical minerals, as a critical mineral, with aluminum and tungsten and all of these other critical minerals. Silver should be there. Silver will be there, and silver will be with gold, and we'll have a huge revaluation on the top side. This is epic. We're going to be seeing higher heights. So, growth catalyst is the new paradigm shift for gold and silver.
Yeah, gold up 8.3% so far this year in US dollars, 7.9 in Canadian. Silver up 12% in US dollars and 11.7% in Canadian dollars. This is huge. We're going to keep our eye on this and try to keep everyone up to date in the market. Of course, they can listen to the Real Money Show and check that out on YouTube. But that's it today for the Real Money Rundown. Thank you, Jerry. And if you want to stay ahead, everybody, please subscribe, keep it real, and listen to The Real Money Show, and we'll see you next time.